because the belief is that these spreads have come off. Earlier in the week, we did get a note coming in from Phillip Capital as well. They alluded to the same. So best to get in the view of Mr. Rajesh Bhatia, who is the Director of Finance of the company for the same. Thanks a lot, Mr. Bhatia, for joining in. Remember, you joined us about a couple of weeks ago saying that spreads in the second quarter were the same as the first quarter. If you could tell us how they are in the third quarter so far, where do they stand at? How do they compare to the previous quarter?
So I can only tell you that October was better than September in terms of the overall spreads for us. November is bit subdued, but within November now we're seeing a 10% price increase happening. And what's happening around the raw material and the world market is also to be noted. Today, there is a huge, the China and the Southeast Asia are boiling. The demand is so robust. They are short on capacity. And from our overseas plants, now we catering to those far-flung markets. So much is the demand now. So
quantify those numbers, Mr. Bhatia. What were the spreads in September? What were they in October? What are they in November right now? If you could put numbers to that for both BOPP and BOPET.
September BOPET would be about 60 rupees. October is about 10% higher than that. And November was sort of a bit subdued, but given the 10% price increase that is coming, that is expected, given that the raw materials have firmed up, given that there are raw material shortages also happening. So I see the robustness coming to this. And for sure that, Q4, we will be overall when we will see a quarter, maybe, this may be a bit little than the previous one, but, Q4, given that the raw material, given that the world dynamics and all that. So I think that, we should have a reasonable, higher margins as compared to Q1, Q2. So Q2, couple of months, July was an abnormality where, because of hoardings and all that, the margins were too high. But about 60 or so will be a good margin to expect at least for the next 55 to 60 is a good margin to expect for the next 1 year or so.
Okay, hi Mr. Bhatia, good afternoon. So you're a seller of BOPET films, right? So, this would be negative for you, but now you are saying that raw material prices are coming down. Where do film prices fall into the mix? And, how long before we can expect some stability in these prices?
No, see, the raw material prices are now, they had hit a bottom in March. And thereafter, because, the PTA demand was down, but the PTA, instead of the refineries, instead of PTA now, they are going more into the gasoline. So because, the PTA is more used in the polyester as well as the textiles and the PET bottles, where the demand still continues to be a bit weak. So worldwide, a lot of companies are diverting their paraxylene to gasoline products. And that's where we're seeing shortages happening in the PTA and the MEG markets, which are driving up the prices internationally for the films. Like, if I were to give you an indication, today the China, if we import from China or Southeast Asia, the landed prices are anywhere between $1.65 to $1.8, but India prices are at about $1.35. So the prices will catch up much sooner, because this kind of a differential cannot remain for so long. And given the raw material shortages, which we are all seeing, some of the production capacities will get underutilized because of this. So that will also drive up the prices for sure.
So, Mr. Bhatia, how will this affect volumes in the second half and or maybe even Q3, if you could give us a number?
So, I think from our perspective, we'll continue to operate at the full capacity utilization. There are no volumes being compromised at any level. So for us, there's nothing, because we have a tie-up, long-term tie-up with our raw material suppliers, and we're not affected. But some of the players on the western coast and all that, they're seeing some more challenge in terms of the raw material procurements. Just to give you an indication, we are also looking at because for all our international businesses, we do the worldwide procurement of our raw materials. So that's not much of a challenge for us. But right now, even in India, the raw material procurement is not a challenge for us. So volumes, I'm not seeing any effect on volumes because of either the raw material shortages or from the demand side, which continues to be good.
Mr. Bhatia, thanks a lot for stopping by and giving us all those details. The key takeaway being that even as spreads have softened out in the month of November, after seeing a bit of a spike in October from September, they are likely to return to the 55 to 60 sort of levels as we go forward, as even raw material prices are coming off. That's Uflex. The stock has seen a big move in just last 6 months. The last 1 month has been slightly flattish, primarily on account of this fear that spreads will come off. With that, we'll move on to CNBC TV 18 exclusive on DHFL. Banking sources tell